Hey guys, it's Tyler Dahl with Remax Connects, and on this week's Mortgage Minute, we are here with the one and only Lisa McNair from RBC, and she's a mortgage specialist, but she's fully mobile, she's fully digital, and she's ready to help your needs. Today, Lisa's going to talk to us about the Stated Income Program, which helps people like me, self-employed people, get mortgages. Traditionally in the past, they've been having a tough time because they try to make their income smaller on their tax return, and Lisa's going to navigate through that process to tell us exactly how self-employed people can get qualified at RBC. Lisa, how you doing today?
I'm good. How are you doing, Tyler?
I'm awesome. I'm awesome.
Good.
We had to shake it out, and we had to do it early, so I feel really good.
We're good.
Okay, as always, we are going to start off with you giving us a range on the rates, fixed and variable, and what they're coming in at right now. Shoot.
Yeah. So rates are super low right now. This is a great time to be buying, especially first-time home buyers. So our rates can run anywhere from a 1.85 and up. So our variable right now for a high ratio is 1.85.
Okay.
5-year fixed for high ratio is 1.94, and it just goes up slightly from there if you're not a high ratio mortgage.
So 1.85 and 1.94 high ratio. Now high ratio, what do you mean?
High ratio means if you don't have the 20% minimum down payment, you're going through a default mortgage insurer like CMHC or Genworth.
Okay, and then if they have 20% down, the rates are going to be a little higher.
Slightly higher, only because we give a slight discount for the clients that are going to be going through a default insurer that has a premium tacked onto the mortgage. Yeah.
Listen, okay, so let's jump right into the Stated Income Program. I think there's a lot of people that don't know anything about this program, and I didn't know anything about it until you told me. So I just want you to dive right in and tell us all about the program.
Yeah. So at RBC, we have an amazing stated income program. And what that is specifically for clients that are self-employed. So we understand and we have understood in the past that, at the end of the day, what's coming out is the accountants are coming out like heroes. They're writing their income down very low to avoid paying, certain taxes, having a lot of write-offs. And then when they come to a bank and their net income is quite low, it's very hard for them to get approved for credit. So we do have a stated income program when it comes to clients and their mortgages that we use more of a realistic number for their income. And it's based on a few criteria. One thing is having good credit. One thing is having a minimum of 65% loan to value. So you have a little bit of equity built into your home, or you have a minimum of 35% down payment if you're making a purchase. And then there's a couple other things. You have to have a minimum of 2 years self-employed income as well. So those are the biggest criteria at the end of the day.
So tell me, what's good credit mean to you guys at RBC?
So good credit to us is, we would like to see a minimum of 680 or higher on their credit score and good history.
Okay. So, okay. And then going back, if they own their own home, you say 65% loan to value. That means if they're taking money out of their own home, right, to have another purchase or to do whatever they like with their own money, that 65% means that they have to have at least 35% down, correct?
Correct, yeah.
Okay.
And if they wanted to if they already own their home and they're looking to either switch their mortgage to RBC because maybe they're in a B lender, you go to a broker, and a lot of times people are scared of self-employed clients because that's the exact reason that their income is written down low. So at that point, as long as you have some equity built in and we don't go over 65% of the value of what your house is, we can look at getting you the state income program, and we can almost triple your income from what your net income shows on your tax return.
Say that one more time for everybody out there.
So we can almost triple your income from what your net income says on your tax return for our application.
That's awesome. Okay.
Insane.
That's insane. Okay.
Yeah.
So let's transition now. If they don't have their own home, how can they afford something if they're just solely looking to purchase something new?
Sure.
Without the equity of their own home?
Yeah, so we do also deal with Genworth's stated income program. So Genworth is a default mortgage insurer. So if you're making a purchase and you don't have the 35% down, but you have anywhere from 10 to 35% down, we could look at doing the stated income program through a default insurer. The only thing with that, obviously, there would be the insurance premium on your mortgage as well.
So default insurer, if they don't have the 20% down, then they have to get insurance from companies like Genworth, CMHC, Canada Guarantee.
Yeah, Canada Guarantee or Genworth are the two that do the stated income program
Okay.
with us. And yeah, so it's not necessarily 20%, it's if you have under the 35% down. If you're self-employed and we need to write your income up, and we need you to have 35 to be in a conventional mortgage, or 10% to 35% to be within the default mortgage insurer stated income program.
Which is the insured mortgage.
And those are for purchases only, the default insurer.
So you're telling me that if I'm having trouble with financing, you could come and through the stated income program, you could come and take a look at my income and my tax return, potentially triple it in certain cases, and I could put down as little as 10%.
Correct, on a new purchase, yes.
Okay, that's awesome. And then what's the qualifying criteria?
Pretty much the same, 680 Beacon's credit score, 2 years self-employed. Yeah.
Okay, so that's exciting. So for everybody out there that's listening to this and you're not too sure, Lisa's here. She's experienced. She's fully equipped to help you guys. She's been kicking butt on this program for a while now. And one of the reasons we wanted this on our show is because she helped out a mutual client of ours, Joe, and he was dealing with a private and he was dealing with a secondary lender, and the interest rates were above 6%, something like that, Lisa. She consolidated all of this through the stated income program, and now she saved him just over $700 a month in his monthly payments.
Right.
Okay. He's thrilled. He's pumped. So if anybody wants to chat with him, we'll connect you guys. But more importantly, to have somebody like Lisa on your side that knows this and knows the ins and outs of being self-employed, and I know it is hard. This is who you want, and you want to be able to chat with her. So all of Lisa's information is going to be below right here. And Lisa, what's the best way to contact you?
Email or cell phone are the best way. I'm pretty much available 24/7. So you can reach me on either.
Okay, great. All right. Well, as always, Lisa, thanks for your time.
Thank you.
Okay, and we look forward to seeing you next month on Mortgage Minute. I know the topic's going to be phenomenal. Okay?
All right.
We'll see you later.
Take care, Tyler.
Have a great day. Bye now.